Good to have you join us on this Tuesday. Hello and welcome to the program. I'm Kim Young-gil in Seoul. Coming up on today's edition of Business Daily. South Korea's consumer prices rose in July at the fastest pace in 4 months, due mainly to a sharp increase in fruit and vegetable prices. The South Korean government is expected to reveal a slew of new real estate policies, as well as tax reforms this week. These stories and more coming right up. Korea's consumer prices have risen steadily since the turn of the year, and in July, prices rose at their fastest pace in 4 months. In a bid to cool inflation, the government plans to unveil measures to stabilize prices, especially as the country approaches the biggest holiday season of the year. Our Kim Mo-kyun starts us off.
The government has vowed to push for strong measures aimed at stabilizing consumer prices. During a vice-ministerial meeting on Tuesday, Korea's finance ministry announced it will attempt to cut prices for farm and fishery products by as much as 50% by early next month, stressing how the cost of living has hit an over 5-year high.
Prices of Napa cabbages and white radish have risen a lot, and we plan to increase supply to meet demand. We will also expand wholesale market shipments and hold discount events.
The ministry also said it hopes to quell rising prices before the peak season in October, when people in Korea celebrate the traditional Thanksgiving holiday, Chuseok. In the long term, the ministry has vowed to focus on driving down agricultural produce prices in general, which have surged due to month-long drought in the spring and frequent floods and heat waves that affected supplies. This comes as Statistics Korea released its monthly consumer price index for July earlier in the day, which showed signs of steady inflation. The consumer price index rose 2.2% on year in July, its highest growth rate since March, when prices rose by the same margin. The figure is slightly higher than the previous month's rate of 1.9%, as rapidly rising fruit and vegetable prices pushed up the overall figure. Agricultural, livestock, and fisheries prices jumped more than 8.5% last month, with prices of fresh fruit and vegetables rising by a whopping 20% and 10% respectively. Prices of electricity, water, and gas also contributed to the rise in July's prices, as they climbed 8%, while the rise in petroleum prices, which had been the biggest factor pushing up the consumer price index, slowed to 0.5% last month. The government expects inflation to cool down in the coming months, following the impact of its newly released measures to stabilize prices. Kim Mo-kyun, Business Daily.
Korean exports posted an on-year growth for the 9th consecutive month in July on robust outbound shipments of semiconductors. Not only that, but Seoul's efforts to diversify its global trade links appear to be paying off. Our Oh Seung has the details.
It seems Korea's export boom is continuing as the country diversifies its outbound shipment destinations. The Trade Ministry on Tuesday said exports grew 19.5% on year in July, hitting $48 billion. That's the 9th consecutive month of export growth for the country. Imports also surged 14.5% on year, with the country's trade surplus tallied at just over $1 billion. IT products were the main drivers of export growth once again, as semiconductor sales jumped 52% on year, with solid-state drives hitting a historic high of $520 million. Korea's shipbuilding industry saw a 43% jump in exports on a spate of new vessel orders. But another major growth contributor in July were increased shipments to other Asian countries. Exports to India surged 79.2%, fueled by rising demand for wireless communication equipment and machinery. Increased exports of machinery, semiconductors and displays also drove up shipments headed to Vietnam and the ASEAN bloc by roughly 30%. Meanwhile, shipments of chips and steel to China and Japan continued to grow for the 9th straight month. Trade with the US also picked up 7%, despite a significant fall in exports of automobiles and household electronics.
Experts say Korea must continue to increase and strengthen its trade links in the face of various global uncertainties that could affect its exports down the line.
Risk factors include US trade actions against Korean goods and businesses, as well as a possible slide in global oil prices and financial market uncertainties as the US Federal Reserve looks to reduce its balance sheets.
With the world economy is set to recover steadily this year, exports are forecast to maintain an upward trend for the rest of the year, albeit slower than the pace we've seen so far. Demand for semiconductors is likely to continue growing, but the hike in unit prices is projected to soon lose steam.
Aside from traditional export items such as machinery and IT products, the analyst also said consumer goods such as household products and cosmetics have also seen growing demand in emerging markets, showing potential for further growth. Oh Soo-young, Business Daily.
A package of comprehensive measures is on its way to counter the overheating real estate market in the capital region. The Policy Committee chair of the Democratic Party, Kim Tae-yeon, handed a warning to speculators during a party meeting earlier today. Kim said the party, together with the central government, will not ignore signs of price distortions caused by real estate speculation. He signaled strong steps will be taken to deal with owners of multiple residential properties tied to speculative activity as the government looks to support young families looking for a place to live. He noted sky-high housing prices were a burden on regular citizens and a reason why young people are delaying marriage and starting a family. The full measures are expected to come tomorrow following a meeting between the ruling party and the central government. The government has approved a roughly $4 million budget to gather public opinion on whether to restart or permanently halt the construction of the Singgori 5 and 6 nuclear reactors in the southeastern city of Ulsan. The funds were approved during a cabinet meeting today presided over by Prime Minister Lee Na-kyun. The money will be used to run an independent committee that will be tasked with collecting public opinions through phone surveys over a 90-day period. Among the 20,000 people surveyed, 350 will be selected for in-depth discussions and to deliberate on the fate of the reactors. As part of its energy policies, the Moon administration wants to start phasing out Korea's reliance on nuclear energy in the coming years. With the launch of Kakao Bank, Korea's second internet-only lender, K-Bank is no longer alone in the market. Customers should expect a new level of service and quality as competition heats up. Our Elliot Kim has the story.
Kakao Bank took the banking industry by storm with its July 27th launch. Unlike Korea's first internet-only lender, K-Bank, which saw 100,000 new accounts created in 3 days, Kakao Bank reached triple that figure on its first day alone. The bank's most powerful weapon? Ease of use. While other banks have a multitude of different apps for security and services, Kakao Bank requires the installation of just one single app. Signing up is quicker by using existing accounts from the company's mobile messenger, Kakao Talk. It also doesn't hurt that the bank has highly competitive interest rates and is loaded with launch day features. The bank has extended lines of credit of up to $135,000 at low interest rates of around 2%. K-Bank is also flourishing in this new era of internet-only banks in Korea. Its annual target of around $450 million in savings and $350 million in loans was achieved in just 2 months. Despite questions on how a bank without physical branches would survive in the real world, both banks have tapped into nationwide ATM networks. K-Bank users can withdraw from ATMs at convenience stores, while Kakao Bank has a partner network of 114,000 ATMs located in banks, subways, and convenience stores nationwide.
Let's not forget the policy efforts that went into allowing new players to be creative and innovative in the market. Through improvements in the licensing process, we can now encourage participation from a more diverse set of players.
With internet-only banks launching a range of competitive products that challenge those offered by traditional brick-and-mortar banks, there may be an impending shift in the future of banking here in Korea. Elliot Kim, Business Daily.
Following the announcement of a series of new economic policy plans last week, the new government plans to continue revealing more details of its economic agenda this week as well. To give us some analysis of the government's fiscal policies and strategies, we have Professor Yan Jun-seok from the Catholic University of Korea joining us in the studio today. Welcome, Professor, and thank you.
Happy to be here.
Now let's get started. So the Bank of Korea hinted at the possibility of an interest rate hike and tighter monetary policy. So is Korea's economy actually recovering well? And if so, does the BOK have any wiggle room to raise the interest rate?
Okay, well, given the latest statistics, I'm not sure if BOK really wants to raise its rates. If you look at the second quarter growth figures, it didn't do very well. It was 0.6% compared to 1.1% in the first quarter. And the inflation figures which came out this morning, it showed very high inflation, but mostly because of vegetables. The core inflation rate was actually very low. So I don't think they really want to raise the rate at all. In fact, these are signals that you should lower rates. But I think there's three factors which forces BOK to consider raising the rates. The first is the U.S. Fed. Right now, the U.S. Fed policy rate is 1 to 1.25%. Korean policy rate is 1.25%. And if U.S. raises its rates once more, then the U.S., which is deemed safer, will actually have higher rates. So there will be capital outflow. Now, if the capital outflow is slow, then Korea will do fine. But there's always a danger that if there's an instability globally, then we may have a rapid capital outflow and in the worst case scenario, a currency crisis, which leads to the second factor. The reason that we are worried about the possible global instability in the financial market is that U.S. is considering not purchasing any more government bonds. Because of the global financial crisis, in order to supply liquidity to the banks, the Fed has been buying a lot of bonds. Then it's currently keeping level. It's buying replacement bonds for bonds which have expired, but it's keeping it at the level. But now they're considering selling off and lowering the level of bonds. This has never happened before. So we are not sure what's going to happen, and that's making a lot of people nervous. So that's the second factor. The third factor, which is I think unlikely, but still the Bank of Korea has to consider it, is we mentioned the real estate market overheating in the Seoul area. The government and the Bank of Korea would like to handle this using regulations, but if the regulations cannot handle it, then as a last choice, you may have to raise the interest rate.
And now, South Korea's household debt stood at $1 trillion as of end of March, and the government is seeking to unveil some price control measures for the property market. So, are we actually seeing signs of overheating in the real estate market in Korea?
I don't think so. If you look at the nationwide housing market, it's only this whole area and some hot spots within this whole area which are overheating. Now, the previous story mentioned possibility of speculation, especially by people who own multiple housing, but perhaps we need to go back to the basic reason why. Because housing is the biggest investment that most people will make, and because they depend on this for not only their retirement, but also they need to be around areas where they have the highest potential of getting a job and getting good education for their children. That means the Seoul area. So the rest of the nation has oversupply of housing, but in the Seoul area, you have excess demand for housing. And if you're only going to buy one house in your lifetime, you would like to have it in a very convenient place, and you would like to have a very high resale value. So I think that's why people are concentrating on the Seoul housing market. And then some of the government policies just trying to get the control the real estate market, I think made the problem worse. 2 years ago, the government said that in order to protect the people who have borrowed money to buy housing and in order to protect the financial market, they were going to limit the supply of housing in the Seoul area and keep the prices high. Now we're going through a very long slowdown. There's not a lot of good investment opportunities, and the government just told you that they're going to keep the prices of housing high. What are you going to do? You're going to borrow money and buy a house because that's the safest investment around.
Right, and back in June, the government rolled out measures to tighten loan screening procedures and prevent real estate speculation. So what new real estate measures do you believe will be unveiled later this month?
Okay, well, the previous story, the political meetings, I think, gave a hint. They want to cut down on speculation, and they want to keep control over people who own multiple housing. But Again, because people, the underlying problem is that people want housing in the Seoul metropolitan area. So I'm not sure if these type of policies will actually do much to help. In fact, one of the reasons that I think we have an overheated market in some of the areas right now is because of the previous policy measures. They cut down a lot of transactions, but because of the timing, there's few apartments which are not covered by those regulations. They still can be traded for a few more months. And apparently a lot of people are bidding up the prices of that because those are the last ones that can be transferred between owners freely before the new regulations kick in.
Right, and tomorrow the government will announce its tax reform measures, possibly adjusting the tax bracket so that the rich will be required to pay more dues. So how do you think the government might retool this taxation scheme?
Okay, I think they're just going to stick with what they announced already. The taxes on the super rich, taxes on very high profit firms, taxes, a reduction of exemptions on inheritance taxes. They've been mentioning that they might raise taxes on the second highest level, people who are making between 300 to 500 million won per year. But I don't think that's going to happen because there hasn't been enough discussion on that, and that was sprung kind of as a surprise. And they've been getting a lot of criticism for it, so I think they're just going to stick with what's been announced 2 or 3 weeks ago or during campaign.
Right, and shifting gears, internet banks are emerging as a sort of a game changer in Korea's banking industry. And recently, the Kakao Bank attracted more than 1 million accounts just in 5 days since it was first launched. So how do you think this will affect the country's financial sector? Does it pose a threat to the traditional banks? And do you think we need to deregulate the industry to accommodate this change?
Well, I think we need further deregulation to accommodate not only some of the differences between the existing banks and the internet banks, but also to produce more competition. If you look at the financial sector over the last 20 years, because the government and the financial sector people thought that larger companies, larger capital was always good, they've been consolidating and merging all these banks. So we now only have 4 major commercial banks and some other specialized banks, and that's really reduced a lot of competition. And as a result, Korean banks are not known as being very innovative. They're not known as aggressive players in the global market. So what government has been trying to do for the last 20 years is to demolish the walls between different types of financial institutions. So commercial banks will be set in competition with insurance companies or securities companies, but those haven't been very effective either. So this is the first time I think that in a long time that they're actually allowing new commercial regular banks that can engage in all general areas. So I think we need more banks in that field and more competition.
Thank you for your insight today, Professor.
Thank you.
Global trade is continuing to fall, sliding for the second consecutive year in 2016. According to Japan's External Trade Organization, the global trade volume of commodities and nominal exports fell 3.1% last year compared to 2015 to just below $14 trillion, while narrowing the gap compared to the 12.9% contraction seen in the previous year. It marks the first time world trade has posted negative growth in consecutive years since 1983. Actual trade volume of exports, a common trade indicator, fell 0.2%, marking the lowest growth rate since 2010. The average sales price of Samsung Electronics mobile phones hit a 3-year high in the second quarter. Market research firm Strategy Analytics said on Tuesday that Samsung handsets were sold at an average of $235 in the April to June period, up 5% on year. The average price had been trending downwards in part due to last year's recall of Galaxy Note 7 smartphones. Samsung sold nearly 95 million handsets in the second quarter, quarter over 20% of the global market share, with the Galaxy S8 and S8 Plus making up nearly 20 million of these sales. With Apple set to release a new handset in the third quarter, analysts say Samsung's current task is to maintain its positive momentum over the rest of the year. Bitcoin investors may be feeling anxious today after miners announced major tweaks to the virtual currency's protocol. It had enjoyed a blistering first half of the year as its value rose from around $1,000 a coin at the start of the year to near $2,500 at the end of June. But many experts have speculated Bitcoin's price is likely to fall heavily ahead of today's protocol change dubbed Bitcoin Improvement Proposal 148. The update is trying to prevent hacking and currency manipulation and reduce users' management fees. There's also speculation that the update will also cause the virtual currency to split, creating a new product, Bitcoin Cash, and taking some of the currency's processing power with it. The operating ratio of Korea's manufacturing sector fell to its lowest level since the global financial crisis, raising concerns of shrinking investment and job losses. Our Lee Ju-young has more.
71.6%. This was the operating ratio of Korea's factories in the second quarter of this year, falling 1.2 percentage points from the first quarter. In fact, the Q2 figure is the lowest level since the global financial crisis, when figures dropped to 66.5% in 2009. After recovering from the Asian financial crisis in the early 2000s, Korea's operating ratio was steadily maintained in the mid to high 70% range. But after reaching 80.5% in 2011, the figures have gradually fallen. The large disparity between different industries is also a big problem. Say for the semiconductor sector, the shipbuilding, automobile, and textile industry, which had once been regarded as the backbone of Korea's manufacturing sector, fell short below the total production capacity in the second quarter of this year.
It is necessary to restructure low value-added industries and upgrade competitive ones by using various legal means provided by the government.
Meanwhile, there are growing calls to overhaul the fundamental problem of manufacturing-oriented growth and instead invest more on SMEs to encourage domestic demand and investments down the line. Lee Ju-young, Business Daily.
A multi-billion-dollar program to renovate old neighborhoods is slated to launch this month on selected target areas. As Eunice Kim tells us, there is a great deal of anticipation around the Moon administration's so-called Urban Renewal New Deal project.
President Moon Jae-in's pledge for a people-first governance will include a $45 billion project to update old, dilapidated neighborhoods, earmarking an equivalent of roughly $9 billion per year over his 5-year term for an overall budget of nearly $45 billion. The Urban Renewal New Deal program will restore 500 rundown sites in major cities, including but not limited to old homes and railroad depots and abandoned factory sites. Unlike past approaches of demolishing entire lots and rebuilding from scratch, the neighborhood makeover will focus on small areas with an eye on building around unique community characteristics, adding on parking spaces or small libraries, for example. Starting this month, local governments, lawmakers, and public corporations will consider the review criteria, receiving business proposals from September through early October before selecting the first 110 recipient sites by December. In fact, a separate urban revitalization program was launched 3 years ago by the Seoul Metropolitan Government, beginning with the districts of Changsin-dong and Sungin-dong. Albeit at a smaller scale, the results were appreciated by its residents.
With the project, the roads have improved, and in general, the environment has gotten cleaner as well.
Since then, 46 areas nationwide have launched similar programs, but the well-intended project has its side effects too. Already, there are hints of rising property prices, driven up by speculative investors. Data from Korea Appraisal Board shows the price of housing in Seoul for low-rise structures at or below 4 floors has been edging up since April, when then-presidential candidate Moon solidified his lead as the frontrunner. June's increase was quadruple that of the same time last year. In this Hongsu-dong district, as of 2015, rental costs for commercial properties rose by nearly 4 times the average rate seen in the rest of Seoul over a 2-year period, driving out many of its native residents.
We need to know more details, such as how profits will be generated from the development and what the measures will be for the tenants.
Experts are advising that developers work with local residents and ensure their needs are met in order to achieve the initial goals of urban regeneration and improved living conditions for all. Eunice Kim, Business Daily.
And that wraps it up for today. Thank you for watching, and we'll be back tomorrow with more at the same time, same place for your Business Daily. Until then, goodbye.